Welcome back to this lesson. In this lesson you are looking at another example, which is the continuation of the previous example from the date of 22nd. So we are looking at the we looked at the 21st, so we are looking at the 22nd during Asian session. Remember, we have said that Audusd is ideal for Asian session, making the highs or lows of the day. So in this day, even the previous day on Monday, I had forgotten to look at the calendar, so we are going to look at the calendar. So any news that will impact the Audusd or the USD is ideal for us, but we can see that on Monday we did not have any news. Even on Tuesday, just medium impact news on Tuesday, and Wednesday we had there's medium impact news for the USD. So that's also okay. So we just go right into the charts, and in the charts we had looked at these examples. We had previously come off this, hit the discount array, so the market was just retracing back into a premium array, and we had hit this daily order block, and from this daily order block we'll be looking for the market to move lower. And where is our next objective? Our next objective will be this low. So until the market reaches to this low, we'll be looking for sell opportunity, and any up close candle that is an order block, it will be an opportunity for us to capitalize on. Or if we create an imbalance like here, it will be an opportunity for us to continue to capitalize on sales. So let's just look at the 5 minutes on the 22nd. So on the 22nd of October, after we had hit, remember we wanted the market to hit the premium array, and we hit the premium array at Tuesday New York session. And did we get any breaking structure? Yes. So we got a breaking structure at this point, and we also got a retest at here, the New York session. But we are not interested in the New York session. We want to trade off the London session. The Asian session. I don't know why I'm thinking about the London. So we are looking at the Asian session, which started at this point, 2000. And from this point, the 2000, even the 2300, we see that the market was still in this area of this dealing range that we had created from the London session. So remember that once we hit this higher time frame PD array, premium array, and the market breaks market structure, it creates a low probability for the market to come back again to run this high, but the market may capitalize on any liquidity that is inside that range to run stops. You can see that here during this time 2000, we ran again the stops here again during the Asian session. So that's okay, but we want at least this high to be left intact. So with that in mind, remember this is our dealing range. So we can see that the first time that we hit was 2025, and the market broke structure, but we did not get any retest here. The market just rallied lower into this range. So but we remember that we are in a bearish market, and we want the market to continue to move lower. So we can see that the market gave us another opportunity back, where we came back to this high, and we ran buy stops these are buy stops, and there are buy stops inside this range. Now the range will become bigger from there to here. So this is just a retracement. The reason that we are focusing on this as a retracement is because we have this dealing range. Another thing, we have come off this higher time frame PDRAs. Remember, we said that ideal setups for us to capitalize on during the Asian session is when we have recently come off a higher time frame premium or discount array. So, and that's what's happening here. So we have not moved away. We have not reached for the opposing target, so we still have an opportunity. And from there, we see that we got a break in structure and a retest here. So this is the break in structure here, and that's our breaker there. This is our breaker, but not every time. We have seen examples, or we will look at examples where the market will just retest the breaker, but not every time that we'll find the retest back to this area of the breaker, the bearish breaker. But if the market, and that's if the market creates an imbalance either below, mostly below the breaker, and you see that here we have consecutive candles imbalances here, so you capitalize on or sell at the first imbalance that is closest to price. So this first imbalance closest to price, that's where you want to maximize and enter in your sell opportunity. And with that, we take our sell position or anchor this tool. The stop loss will be at the high of this breaker here, and we'll start to target. Our first target, of course, will be this low because we are scalping. Yeah. So what you are going to journal or study is how many pips did it take for you to be in drawdown, or how long did it take for you to be in drawdown. You can see that the market almost immediately moved away from our entry point, which is good because we want to see an immediate feedback from our entry point. And how long again did we take from our entry to target? So it took roughly around 4 hours, and the duration in time that we took, that's how you also want to study it and to take note of that, because with that data you'll be able to, in your future trades, you'll be able to know if you're in a market for a time exceeding that duration of data that you have studied, then you'll know that this time is not ideal, and maybe you'll be able to make the right judgment and either exit that trade or remove your partials. Yeah, so this is the first place that you remove your partials, and also you may leave for an expansion lower after that. So you may remove majority of your trade and leave for any expansion of the market. So that's it for this lesson, and thank you for listening.